All right. Well, here we are back at it. True Payroll bringing you Jim Murray, enrolled agent with the IRS, sort of, kind of, right? Licensed by the IRS. And so we're for what we've learned in the last week about the PPP loan and the loan forgiveness. And anybody that's watching, that's live with us right now, we do have the Q&A open. So if you have a question as we're going along, please post it in the Q&A. The chat is also available. If you'd like to ask your question in the chat, you can do that too. The Q&A is private, so it's only going to go to Jim and I, and we will keep your identity secret. Okay. Unless, of course, you want to be called out. Then you can tell us that. In any event, what we're going to do today is go over, and I have it up on the screen. Let's go to the actual, I can't see what I'm looking at now with this thing in my, oh, there it is. We're going to go over the loan forgiveness application that was released by the SBA. Jim, why don't you give a little bit about you, who you are, where you're coming from, and that way when we save this to YouTube, people know who and what you are.
Okay, so my name is Jim Murray, and I am with Independent Accounting Office. I am a tax practitioner here on Marco Island, dealing specifically my area of enjoyment that I like is small business people. So basically the people that we're doing this webinar for, I do individual and business taxes. I also do trust and all other types of taxes, but my primary focus is on small businesses. That is my background in another life prior to doing this. We also deal with IRS negotiations, offer and compromise, and that kind of stuff. In just full disclosure, Al and I have worked together for about 9 years, and in 2015, Al exited the tax practice to concentrate on payroll and that, and I broke my rule of saying I would never do tax returns if Christ himself came down and told me I had to get in heaven, and bought his tax practice, and just found out that it was kind of my forte. I enjoy battling the IRS. I enjoy dealing with it. I enjoy helping out the underdogs. Hopefully, with these webinars, between my experience, Al's experience, what we know, and our backgrounds, that we are going to be able to help you guys maximize your loan forgiveness. I will say, if you're not clients of mine or clients of Al's and you are just looking at this stuff, this is some complicated stuff. It is not something that you want to wait till the last minute on, as far as trying to figure out meeting all the requirements. If you're not dealing and in contact with either your tax practitioner or your payroll provider, if for some reason it's not Al and you just like wasting a whole lot of money with other companies, it is something you're going to want to be proactive on. As we were finding out just in prepping for this webinar and building out calculation sheets, and that it is it's not easy stuff. It is not as simple and straightforward as they made it appear to be. And we're also, again, as we're probably going to find out, as we did with the PPP package itself, what we tell you now is going to be a broad overview, because we do expect there to be changes and adjustments, and they've already had some clarifications come out from the SBA. And I would suspect there's probably going to be some further clarifications. There is some stuff with this that doesn't quite make sense to what you calculate for forgiveness against what you utilized for getting the loan in the first place. So some of this stuff is comparing apples to oranges. Right now it's the rule, so that's what we are working on, and hopefully you guys will find this one of two things: extremely informative, and you get it, but also the realization that you need to contact your payroll people and your tax provider to make sure that you are going to be in compliance. And as you'll see when we get into this, it'll make more sense of what we're talking about.
With all that said, thank you for sharing that. It's only 11 pages. How tough can it be? And heck, even half of those pages are just instructions.
I'd like to remind you that the BP calculation was one page. One page.
It sure
10 years
was.
ago was one page. So
Okay, so let's get into this a little bit, right? So the application is on screen. So I'm going to be looking to my left. Apologize for that because it is over on my left screen. The first couple pages are just going to be all about definitions. I highlighted a couple of things here. I think one of the most critical things for people to be paying attention to is the number of periods that need to be taken into consideration when calculating the amount that you can get forgiven. So part of this is what is now highlighted. One of the clarifications that we did get as a result of this coming out was what the base period or what the base hours in for a week are. So what we weren't sure whether it was going to be 40, 35, 30 or some other denominator, and it has been clarified this is a 40-hour comparison period. So each week full-time employees are going to be considered full-time at 40 hours. And the other thing that and this is where I'm highlighting here, you're not going to go back before the deposit date of when you got your PPP money and say that there are expenses back there that you're essentially paying now. It is when they were incurred. You're not going to prepay for expenses beyond the 8 weeks. The only caveat to that is for payroll costs. So if your payroll period ends after the 8 weeks, your last one, you can use some of the period of time that payroll costs were incurred. So that's about the only real clarification. Now, Jim, your opinion on this would, and I'm going to spout mine and you tell me if you agree. I would make that last payroll, personally, I would make that last payroll on the last day of the 8-week period and just use up whatever it is I'm using up and paying whatever I'm paying to make life simple.
yeah, I agree. And so the rule came out that basically if you had out of a 7-day week, 4 days fell into the 8-week period, the other 3 days are out, that 4 days is utilized in the calculation as long as you paid and the next most recent pay period after. So for clarification on the expenses, as you already said, it is incurred and paid. So anybody that thought I'm going to prepay rent, I'm going to back pay rent, it is any of the back pay expenses, it's from the date you get the check forward, and there is no prepayment of expenses to utilize that money. I'm in agreement with you. And in just other continue ed things that I've done in this and just other practitioners, they tend to be in the same boat, creating, even if it's a special payroll, to end within that 8-week time. And again, if you're with True Payroll, you could do a payroll every single day and your fees are the same. So there's no additional cost as far as doing that.
Right.
Because there's so many changes that have gone on with this, I with you, err on the side of caution, have everything start and end within that 8-week period.
And let's not forget, the folks that are going to be receiving all this documentation are probably not people that are in the normal course of their daily work doing this kind of audit procedures to verify all this information. So the most simple presentation package that you can provide and box it into that 56 days is probably going to do you the best as far as getting it the application approved. And then subsequently, in the event that the IRS or any of the departments of revenue are tasked with auditing your application and to ensure that in fact it was done appropriately, again, having that package put together cleanly, neatly, here's my T's are crossed, my I's are dotted, everything happened in the 56 days. Bear that in mind as you're moving forward doing this.
I think I'd also throw on one other quick thing, Al, is for anybody that's gotten one of these loans, reach out to your bank, because your bank, just like the packages, when you got the loan, they may have specific criteria that they want you to submit to them, even though they're going off the SBA forgiveness application. The loan applications had some of their own things. So be proactive. This is out there now. So my guess is that these banks are starting to build out their application process. And I think at last count, there was I think it was 11 million, 10 or 11 million businesses that got this loan. So there's going to be inundating of applications of that. And it is basically going to be people that don't do this for a living that are going to have their checklist that's going to get sent up the chain. So have it in order, follow the checklist, because if it's not, it's probably coming back to you saying, put it together.
Right. And so as we get some of the questions too, we're gonna interject. So we did get one. The payroll that we run on the last day of the 8-week period would only be for the hours actually worked by that date. So by and up to that last day. Yes, that's exactly right. So if you're just by chance, if you end on June 30th and that's the 56th day, I would think to run a payroll that day up to the hours of everybody working that up to that day from the whatever the last pay period was that you did it. And if it's a special payroll specifically for it, that's my recommendation.
Yeah, and as with everything else, we're going to get people that are extremely regimented and are not going to want to adjust for this. Just understand you're going to need to make sure you have the documents, and depending on what your payroll system, with Drew Payroll, you can pick out any of the dates you want. It's going to be fairly easy. Some of the tax clients that use other payroll systems, the reporting function is archaic and problematic. So
that's a good point, right? Because even our system, you're not putting in daily rates. So it's not like we're tracking Monday, Tuesday, Wednesday, Thursday, Friday. You're putting in an accumulated amount of time that represents a specific pay period from X date to Y date. So if you're not going to do it that way, where you're cutting off your payroll on the 56th day, recognize that you're going to have some supporting documentation for the amount of hours that you've paid in that next payroll that is outside your normal course of business, that's outside of that 56th day. So if it would happen to be on the 60th day from your date of deposit, and you're doing a 7-day week, then you're paying weekly, you're going to have 3 days out of 7 that would then be on that, because 57, 8, 9, and 60th day, if that's that pay, those are potentially ones that are not included. So you've got to have something that you're going to document that time with, that can separate out from a payroll system what that.
I would also, I think, Al, we'd also throw in there that if you ended on June 30th, all your 941s, all of that stuff are going to correspond to your payroll. So you're going to have double documentation to show that, yes, these were all the expenses that were actually incurred and paid. Yet if you go outside of that, you'll have tax payments showing the payments were made to the IRS, but from a calculation standpoint, it is a much cleaner, simpler process to.
We're going to get
now again. We're talking about people. So there are people now. There's still, I believe, $112 billion that's in the loan program for people to go out. So you're going to be paying 8 weeks beyond June 30th. And what does that look like? At this point, your guess is as good as ours. There is a new bill that's passed the House. That is in the Senate. It appears that in its form at the Senate, it's dead on arrival. But in the scope as it relates to PPP stuff, they were talking about extending to 16 weeks. And now you have a whole other things. So some of these dates, keep in mind, while at this point on the application, they're hard things, were 6 weeks out. A whole lot can happen in 6 weeks that you may not be doing this on the 30th.
And I think what I'll add to that, Jim, is really the only date that's as I'm looking at this and as we've seen other professionals now weighing in on it, it's really probably just the June 30th date. I think the comparison periods, unless they open up 2019 in its totality as a calendar year, I think the other dates for these comparisons are going to probably, now in my opinion, subject to complete retraction. As I know he got the loan, but can he forgive the loan? What we're going to see as far as these other dates here in a minute, I think they're going to stay. I think this is what we're going to end up having to compare to. So that said, let's move on to some of the other highlighted non-payroll related. One of the questions that's come up over the last few weeks is the whole idea of lease payments, and that is for real and or personal property, and was clarified somewhat with business vehicles. So if you've got business equipment that's got leases on it, you're going to be able to include some of that in the 25% non-payroll related. So ultimately, and there's the electric, gas, water, transportation, not sure exactly what the definition of that consists of, telephone and internet, all as long as you had contracts in place for service before the 15th of February. So the real task, Jim, would you agree, for everybody watching this and anybody that's even not watching, anybody that's gotten this PPP loan, is to obviously maximize 100% and to ensure that, one, you hit the 75%, as we found out as well, that's not a minimum in order to be eligible for forgiveness. So you can spend less than 75%, but you're going to have a reduction in, so it's not an all or nothing, as many of us originally thought. So
correct.
that
So, if you spend 70% instead of the 75, that 5% of your loan related to payroll is not going to, assuming you meet all other criteria, is not going to be forgiven. So again, when it first came out, it made it sound like you spend 75, you got $100,000, you spend 75,000 on payroll, and if you don't, you're paying your entire loan back. Then there was some clarification from the Treasury Department and some clarification from the SBA. So now it is, if you're not at the 75%, even if you meet all the other requirements, you are not getting full forgiveness.
Right. Okay. But so ultimately, for everybody that's watching and has gotten a PPP, this is a balancing act between now and the end of that 8-week period to make sure that you fit within the parameters of this forgiveness, not exceeding the 25% of non-payroll costs, and making sure that you have every criteria as we're about to get into. Agreed?
Agreed.
In other words, be proactive. You cannot file this application until after June 30th, even if your 56 days is up before June 30th. So if any of you got the money late April, you're done before June 30th with your 56 days, you still have to wait till after June 30th because that's one of the comparison periods. So here's what the actual what looks like a very simple form to complete. Just a few lines, really, Jim. What's the big deal?
Boxes, a few numbers.
Just a few numbers. So I think the important part to look at is right here. It's going to be the lesser of one of those three amounts. Which one will be yours? And this is where may the odds be ever in your favor. Get your ducks in a row. So as you can see, there's a modified total, which is a combination of a reduction or a calculation of what did you pay, how many people did you pay, and is there any amounts that need to be reduced because what you paid wasn't enough or who you paid wasn't enough. Assuming that you have no reduction, then that's a pretty straightforward amount. The second is your actual PPP loan amount. So in theory, you're spending more on payroll than your loan. There's going to be people that do that. The third is what they're looking at. You spent 75%, and we're going to do a calculation against what was line 1, which is your total payroll cost. And if you didn't meet the 75% requirement, that's going to result in a number less than your PPP loan amount. And then that's going to be the number that's chosen. Any comments on what you're seeing on the, what I'll lightly call the summary application?
My only comment is looks are deceiving. And I think as you pop up an Excel spreadsheet,
I'm going to slide that over now as you're talking.
People are going to find out that this is complicated stuff, even to the extent that over the last few days, as we worked on this, we did double takes and looked at stuff and went back and to the point where when you have to walk away from it and your eyes are crossed and things. But it took days just to get a visual representation of the formulas. So,
okay, I've got that matched up somewhat. So all of the 11 lines, as you can see on the screen, I've added a 12th number, and that's the amount not forgiven. You're not going to see that on the form. However, I highly recommend tracking this so that you know exactly where you stand over the course of every week that you're participating in this program. So I'm pulling in numbers from other worksheets in order for this to do exactly what it's doing. All right, so I'm going to pull that back up. We're going to come back to this in a minute. I'm going to slide that back off the screen. If you have questions as we're talking, please put them in the chat or the Q&A section. All right, let's go on. That's pretty self-explanatory. I don't want to really spend any time on what those disclosures are. Read them, make sure that you're in agreement before signing. Have your documents all put together. Okay, I wanted to specifically address this page. It's now the instructions for the second, what they call Schedule A. Please take special note. If you're an owner in your business and you're on payroll, or if you're a sole proprietor, your amounts of pay will be segregated. And we've got clarity from this application that all you are allowed to claim as amount of pay is going to be $15,385. Jim, what does that represent?
That is the 8 weeks. If you took the cap at $100,000, so if you took the 100,000 divided by 52 times 8, that is the number you are going to. That's the maximum amount you can arrive at and be under the $100,000 threshold, which is the maximum cap on income for anybody, owners, employees, salaried, hourly. That is, so the maximum each person can get is $15,385. You can't pay anybody more than that amount in an 8-week period and get any kind of forgiveness for that amount above and beyond.
Okay, that's also going to apply to any employee that you may have that earns over 100,000.
One of these, I don't know if I heard you say it on that. So for the owners, this is a lower of. It is a lower of the $15,385. It's my reading on it. Al, you let me know what you're doing. Or the equivalent of what their compensation was in 19, whichever is lower. So for some reason, you're an owner that's paying yourself a less amount of money than this in an 8-week period. That's the number that you have to use.
In other words, we
no bonuses.
Inflate our own numbers to ourselves and give ourselves more pay or more hours than we normally would have in that 8-week period. So don't think that you can bonus yourself out to bump yourself up to $15,385 if that's not normally what you have been doing.
I don't know if you saw this, Al. We've got 2 questions. So the first one is, if you received your loan, if you had hours prior to receiving the loan, can you include those hours? My understanding is no. So if I had 40 hours and 20 of my hours were for time worked prior to receiving the loan, in the first payroll, only 20 of my hours count towards the loan forgiveness. It is anything prior to the date that you receive the loan is.
I'm going to go back a couple. Let's see. Let me go back to that one.
And we in the second one, if someone got a raise within that 8 weeks, is that allowed? Yes.
So looking at payroll costs are paid and payroll costs incurred. And so what they're talking about there and what Jim is referencing is payroll costs are considered incurred on the day the employee has earned that pay. So if it's before that loan deposit, they haven't incurred them. You haven't incurred them. They haven't earned them. So you are going to have to separate out that first pay for hours worked. Now, interestingly enough, if the business was closed, well, and they're getting paid from that first payroll, because we're definitely going to have some salons and things like that that were not even open. They're being paid from the moment that arrives. That's the actual intent of this program as well, is to get people paid and not on unemployment. So
at the beginning, this is almost an oxymoron. So at the beginning of your 8 week period, the employee must have earned it and been paid. However, at the end of it, depending on how it falls, you can have earned it but not yet paid it. As long as it's paid in the next pay period, it's included in the forgivable. So because in that 8 week period you just haven't paid it because of the timing of payroll issues, the SBA and the Treasury got smart and realized some people are not going to have the ability to adjust their payroll schedules with some of the bigger non-flexible payroll companies. Now, if you were with True Payroll, you wouldn't have that problem. Shameless plug.
Shameless plug. We are very shameless around here. We live bold and shameless lives. All right, so and part of that point is I think there's a potential conflict in some of that in that, again, a business that's not open is paying employees. They're not really earning it because they're not working, and yet they're getting paid as pursuant to this program. So
I'll go with the adage, it's the government. And if you want to take them on to argue a point,
right.
God love you, good luck. Maybe the odds for ever being your favorite.
Odds ever in your favor.
It is not
my favorite.
So as we go, it's he who has the gold makes the rules, and right now that is the government. So our suggestion is you follow exactly what they want you to do.
So that next question, what if someone got a raise within the 8 weeks? Is that allowed? Your thoughts?
It is allowed to the extent that you don't go over the cap.
And watch for self-dealing.
Yes. So if
it happened to be their 1 year anniversary or their 90-day probation was up and it just happened to fall and all that kind of stuff, that's normal and ordinary course.
Yes, yeah, I would say so. If you can show a clear history of the business having somebody work in a probationary period, when they pass that point, they're entitled to a raise, and it just happened to be in this. As long as you can document and show a pattern of having done that, you have no issues. Again, if you're an owner of the company, you're not going to be able to max yourself out or give yourself, if you were at $10,000 in the 19 as the 8 week cap, that's what you're capped at. For the employees, and yeah, you can give them bonuses and things, raises, and that type of thing, and under the statute that is allowable.
You got to operate your business, and if that's just what you're doing as part of your business, then that's just what happened. Okay, so this I have highlighted because I wanted to reference what people get to choose as their comparison period. Your loan was likely provided to you based on a calendar year of 2019. You took the average of that annual period, divided it by 12, multiplied it by 2.5, and you got your loan amount. Some of you might have had some extra stuff put in for healthcare costs and stuff like that. Now, what's interesting is but you're going to compare your your covered period, we'll get in that in a second, or the 56 days, let's just call it, the cover period is your 56 days. You're going to compare that to either 215 to 630 of 19 or 1/1 of 20 to 229/20. Now, as we've seen, Jim, that has created some challenges, particularly for those that have seasonal, not as defined by here, as defined by South Florida.
This is where it is. I think I made the comment to the other day. This reminds me of the BP calculation where you took the tip of Texas down to the tip of the Keys and assumed everybody was on the same thing. This is where the man is going to stick it to people. So restaurants, salons, other things where they, for in our particular case,
anything that service has to.
They geared up. We are now coming into our slow period, as opposed to somebody in Michigan, somebody in the Jersey Shore, somebody there. This works out great for them. Their payroll is lower. They come into a new thing and they're getting ready to gear up anyway. Where a lot of our mutual clients and just people that we know in the restaurant business and other ones are now getting ready to wind down, or would normally be getting ready to wind down. So this is something that's going to cause some problems, and this is again where so you need to be proactive and pre-plan this and get with your professionals and make sure that your numbers are what they need to be well before the 8-week period ends, so that whatever catch-up you have to play in order to make sure you maximize the 75%, the full-time equivalent employees, and making sure nobody goes below their 75% threshold of what they were making prior. So those are two completely independent 75 number thresholds. You have all three of those that you are going to want to meet, and you do not want to try to be doing that at the very last week, because you could theoretically, depending on how much your people are making, run into issues of the cap, or as we found out, and we'll get to in a little bit, run into the issues of the full-time equivalents because of the cap on that.
So here's the next really simple form. Looks easy enough. Put your name in the hat, see who gets drawn out. Here we go. So I highlighted here yet another period that we need to know about. You're going to need to know your 1/1, 2, 3, 31 period in order to make this thing happen. So first, you're going to have to do a comparison for your comparison period. Are you going to want what I'm calling the 19 weeks in 19 or the 13 weeks in 2020? Then you're going to need this period of the first quarter from 2020. And I'm not going to get into this just yet. We'll take a look. We're going to breeze through that part, folks, because it is highly detailed. I'll show you a sample of a live customer. All names, pay rates, pay types, and all that have been removed. So you're not going to see those names or labels, but you will see actual dollar amounts. This becomes really interesting. There's something called a safe harbor. I'm going to scroll this back up. You can see there's something called worksheet table 1, worksheet table 2. Sounds not so bad. It's just a worksheet, it's just a table. Well, that's where the rubber is going to meet the road on this thing for sure. So this now, page number 7 of the application are the instructions for completing the tables in worksheet A. You're not going to include your independent contractors, yourself as an owner, self-employed, or partners in these tables. So this is going to be strictly your employees. And I'm going to jump over that question because I just got distracted by it. But what if a company started paying payroll in May, auto use as a comparison period? Well, interesting enough, you shouldn't have been able to get a PPP loan.
Not, and you know what, since we have had nobody that really dealt with this, that is not necessarily true. There was a clause in there for you to be able to, so if you were a new business and starting up, there was, and we just didn't have anybody that ever fell into that category, so I never didn't
So
do it.
they had to be,
Happy to
they had
go
to be
and find
started by
out.
2/15, right?
Huh?
They had to be started by 2/15 of 2020.
That I believe is correct. You know what, for the I don't know if you have my contact information or else. I am more than happy to, when we are done with this, I'm more than happy to look into it and find out exactly what the exceptions are. Obviously, if there is one and you follow the rules, it would be really simple. It's going to be, you just use 75% and your full-time equivalents, your 75% pay, and your 75% use is going to be easily met. If you just took it under the generalist of senses.
I'd like to have more clarity on that question too. So the person that's asked that, could you give us a little bit more detail? That'd be great. Okay, so we'll wait for that. And so the ID is going to be the last four of the Social Security. That's pretty straightforward. What do you get to include? It's because there's been some confusion with, at least in the last several weeks, people reading about the Social Security taxes not being includable. Well, it's going to be gross pay for your employee. What's included in gross pay? The confusion, I think, is that there are Social Security taxes that are taken out from gross pay, and that's the employee's portion of it. You're not going to have to worry about that. It's, if they made $1,000, they made $1,000. What their net pay is not relevant to the calculation. It's that gross pay. It's the $1,000. You'll have 7.65 coming out of the $1,000 for that employee for Social Security. You don't need to worry about that. The exclusion was the employer's portion. So it's going to be that gross wage. Now, be careful that you didn't have anybody using the Family's First hours. I know our system allowed for people to utilize that, and that provides for tax credits later. It was an either or, not both. So if you got PPP money, you shouldn't be paying people during the 56 days with the credit pay. And again, there's the 15,385. No one can be more than that. And here's the interesting one. How about, do you want to talk about that, Jim? No, not really.
This is what our full-time equivalents, right?
Yeah, you want me to throw up a spreadsheet on that?
Yeah, that's it's probably got to be something we need to show them as a visual.
Oh, I hit the wrong button. Sorry, guys. Let me reshare that. Hold on. There we go.
So you want me to dive into this, or do you want to?
I'm all ears.
All right, guys. So this is where we talked about earlier. Full-time equivalents are the employees that you have. Anybody that works 40 hours, whether it's one person at 40, 5 people at 8. A full-time person is considered, for this calculation, is considered to be 40 hours. So as part of your loan forgiveness, you have to have in the 8 weeks that you are paying, the same number of full-time equivalent employees you had as you did in your comparison period, whether that be the 19 or the 20. So we'll use an example of somebody that pays every 2 weeks. If you have an employee that is an 80-hour-a-week person, that is one full-time weekly equivalent employee. That's the cap, is this in this equation. So they have 2 different methods you can use. You can use the actual, or you can use, they have a simplified, Anybody that's 80 or above is equal to 1. Anybody, and again, in this example, that is 80 or below 80, you go to 0.5. Sometimes the simplified method works out, sometimes it does not. But you can't have somebody, if you have somebody that has 100 hours, you don't get 1.2. You cap out at 1. So in the equivalent of meeting the hours criteria to be full-time equivalents, you could theoretically end up with arbitrary pickings of people. So if your comparison period is 20 and in the current period you only have 18, you've got to get 40 hours a week for each one of those, or again, and using our example, you need 160 hours of theoretical time. If you have somebody that is at 79 hours for your 2-week period, they're going to be a 0.5. However, if you give them an additional hour of time, they now become a 1. So it is, when you're using this one method, it's an easy but extremely arbitrary way to get somebody from a 0.5 to a 1 with a relatively small amount of payroll. And for all those of you that are wondering, hey, this is wrong, why can my employer pay? I cap out, so I can't get any more, but Joe Blow only has 39 hours, so he can get 50 more hours to get him. We have talked with human resource people, we have talked with other people, and there is no, that we've heard anybody come back and say there is no litigation issue with that. I would imagine the guys at Morgan & Morgan and some of the others are probably going to disagree with us on that. Keep in mind, we are not offering legal advice on this. We are telling you and providing you ways to get to meet the criteria in the way that we know it without.
So let's talk about this just for a second. We're going to go back because one of the things that you have to do is determine what comparison period is going to be best for you. So in the example, here's our 2019 base period, 2/15 to 6/30. Okay, that counts for, by my reckoning, 19 weeks. And using the actual hours, we can scroll down through here and we can see this column is our full-time equivalents. Now you can see I did not cap that in that equation. So I've got some, I even have some corrections to make in this sheet.
And again, for people that are using it, if you are not using the simplified method, you can round, you'll be rounding your people to the 10th.
To the 10th. I've got it to the hundredths. It's really only to the 10th. But as you can see here, this 2019 base period has 23.7 actual, and again, there's going to be some adjustment to that. It's probably about 22.5 of actual full-time equivalents, where the simplified method is higher because of the rounding issues that start taking place when you have less than a 1. If somebody has less than 1, they're a 0.5. But anybody that's over, you don't get to account for that time. So it's actually working out worse. We take a look at 2020, 1/1 to 2/29, and I have it set for 8, but there's 9 weeks. We can modify that. So in either scenario, whether it's 8 weeks or 9 weeks, right? 9 weeks, you have 17 versus 21.68. So looking at the two periods, it's really obvious that the 2020 base period for this company, the simplified method, is going to produce the smallest amount of full-time equivalents. Would you agree, Jim, that that's really what your target is going to be?
Yes.
Okay. So we're playing a modified game of golf. Lowest score wins, and not necessarily 72 and around. So whatever is going to provide you with the lowest full-time equivalent count, that's the period that you're really going to want to compare to when you're looking at, and I'm going to go back to this. I'm calling it the covered period. When we look at this, this is the cumulative payroll for this particular company for the month of May. Total hours for the month, they're at 19. So they're over their full-time equivalents. And that's, as long as you're not below it, you're in good shape.
And I believe when we looked at this, so this is going to be, for people, this is going to be a cumulative number as you go. So until you get to the end, you are probably not going to know whether the actual method or the simplified method is the preferred.
Well, that's an interesting.
Well, no, I guess it wouldn't be.
You kind of do know.
You know.
But what's kind of cool about doing it the way that we've set this up is that you can track this as you go. So if you have a slow week, your numbers might dip. If you have a busier week, they might be over top. But tracking this cumulatively and comparing it as you go, there might be a week you need to throw in some extra hours for some of your employees in order to make sure that, one, they're paid enough for the reduction not to come into effect, and then the full-time equivalent count. So as Jim was saying, to get somebody from a 0.5 to a, so this, like looking at this person, they needed 160 hours. They've only got 141. So in theory, I could add 19 hours to that person. And as you can see, they've now become a full-time equivalent. Okay.
It's an easy, it is an easy way to get your full-time equivalent count up. But again, it is completely arbitrary because it will be based on what employees worked and who is, if you're looking at it from the business owner's point, it's who is the closest to, if it's weekly, you start out with the people that are closest to that 40 hours. 5 people that are at 39 hours, you give them 1 hour each. You've now just added 2.5 full-time equivalents in the calculation model. So, and again, that each one of these is an independent thing as part of the forgiveness process. So
in the interest of time, I'm going to flip us back over here.
And just a real quick outlook, we're looking at a question on here.
Yep.
Info they used to calculate payroll loan was the 941s filed in Q2 to Q120. They used an average monthly payroll for that period.
Right, and yes, so the bank used a different than an annual calendar. They used a fiscal 12 months. They went from Q2 to Q1 of 19 to 20. It's still a 12-month average, and I think what the interesting point is, your comparison period for the forgiveness is not going to be that. It's going to be this. You're going to pick either the 2 months in the beginning of 2020.
Yeah, the comparisons are locked onto a calendar period, as opposed to there have been some unique liberties taken in the calculation of some of these loans as to what went into it, what went onto it, time frame. A lot of the calculations do not appear to have gone in sync with sort of what the rules were. But at the end of the day, you got the loan, and so you're working with numbers of that.
I know he got the loan, Jim. Can he get the loan forgiven?
However, when you're dealing with different forgiveness periods to calculation periods, it may be a good thing, it may be a bad thing.
Well, and here's the first of the interesting parts of this worksheet. And so it's the hourly salary reduction calculation, which is to ensure that in the 56-week period,
56
not
days.
one of your employees was less than 75% of what they had been making. If
56 days, Al, not weeks.
56 days, sorry, thank you. Well, you know, I'm going for Congress.
I just don't want to throw another, we'll get all these things. How did you calculate 56 weeks?
Right. So this is what they're talking about. This is the worksheet table 1, that you're going to need to complete. So what I'm going to show is what that in fact, let me get to where I'm doing that part. Here we go. Table 1. So here are all the steps that are in the instructions for completing what looks like a very simple table. So the employee's name, their last 4 digits of their social, what did they receive in the 56 days, what was their average full-time equivalency, and did they make enough? So I'm going to show an example of what happened to somebody. Here's an employee. In this particular case, their rate of pay dropped from what their comparison period was. Now, in this particular case, it looks like there's going to be an amount of the loan that is not going to be forgiven for a salary reduction. So, and also it happened here. Their rate of pay during the 56 days thus far is at 71%. This one's at 61%. So there's going to be a calculation that says how much is going to be reduced. Interestingly enough, this person, now I'm not going over what all these steps are. You can look at that. We can talk a little bit about it if people want. There was no comparison period for this person because it's a new hire. So they're exempted from the reduction. So on a new hire, you don't have any base period to compare it, while they're paid less. The step 2, let me just clarify what that is for everybody. Step 2 is somebody with a payroll on February 15th. So this person wasn't hired on, they didn't have any pay on February 15th, but step 1 being a quarter, they were paid during the quarter, but it was after February 15th. So based upon what those steps are, there isn't anything to worry about for that particular person. There's no reduction needed. So we weren't expecting this at all. So these results were a little bit like, what the heck happened here? And interestingly, on this one, we're not going to be able to know step 2. And the reason it's in green, do you remember what that is, Jim?
That's the June 30th.
Right. So if on June 30th, this person is restored, that goes to 0. Know your numbers, folks. I think at the end of the day, that's probably the most critical part of going through this application. So I'm just kind of going back. There's going to be an amount. Again, I'm going to flick back and forth a little bit where you have to lay out every single employee. You need to track what's going on. If you're not going to do that till the end, you might find that something's not going to be forgiven. Let that sink in for just a minute. Get proactive.
And I think I'll throw on top of it. So if you're somebody that's watching this and you've got, you're running QuickBooks or something and doing your own payroll, there's a lot of calculation work that's going to be involved here. And if history has taught us anything about stuff like this, if you think you're just going to throw a bunch of information at the bank and say, figure out what I did, my guess is it's all coming back to you.
I'd agree.
Or it'll go in, you will have no calculations, and they will.
They're going to bounce it back to you.
they'll bounce it back, or you just won't get the loan forgiveness. Or the issue is going to be if they do calculate it and they calculate it on theirs and they do something wrong, you now have no data, no history of your own to have an argumentative point from, and are not going to know what they're going to do. I'm sure some of these banks will come out with packages in spreadsheets and things where you enter stuff, but it's still it's complicated stuff. They have made this a very complicated programming calculation. I'm not exactly sure why, other than I think it's just the government, and that's what they tend to do. But again, document, proactive calculations, proactive stuff. So if you're not talking to your payroll people, you're talking to your accountants, start talking to them, especially if you were somebody that got the loan a month ago, 6 weeks ago, 7 weeks ago. If you're done with your 8-week period, you really want to start doing your calculations.
There's only one that you're not going to be able to do, right? And that's the 630 comparison.
Yeah, you're just going to be done. And at that point, it's figuring out, did I do this the right way?
And you probably will want to reach out to whoever's you're getting help from, and maybe talk about what happened. So.
And there's other things, people need to look into too as well. So if you have an employee that voluntarily took a different position and different pay, and nobody was put in to replace that person, that allows you some reductions of the full-time equivalents.
Great point.
If you had somebody that didn't come back, you offered them a job and all that, that is somebody that can be excluded from your full-time equivalent. So there are exceptions to the rule. If you don't know what the rules are and you don't know what the things are, you may miss out on those.
Okay, so I'm going to address what you just mentioned, and also we now have 2 questions, and I want to address the first one. So there is a part called full-time equivalent reduction exemptions, and that is part of what Jim was talking about. I believe that in the case of this particular customer, this one and this one may go to reduce the total full-time equivalencies, and so as to not hurt the company seeking that forgiveness. So there are exemptions. I'm not going to get into how that's done. There are additional calculations for that, of course. And so we've got, as you can see down here, I think we've built out every possible scenario at this point. However, subject to change and improvement.
Yeah, and what our objective here was is people. I mean, I know we've thrown a ton of stuff at everybody. At this point, we're trying to give you a broad spectrum of information with very little depth, because we are not certain. As we found.
And that, Tim, and plus everybody's stuff is going to be different.
Right.
We can only talk about the generics here. If you need help or you want more answers, then definitely reach out.
And I will say, because I know there's somebody that's either going to watch the video or is going to see this or is wondering. No, we will not send you our spreadsheets.
Correct. It's way too complicated to try to give to somebody. It would take hours and hours and hours and hours and hours just to explain how we came up with what we've done. That said, the question is, if you're an owner employee and you're the only employee, do you leave yourself off the tables? The answer is yes. You have a specific line item in line 9 on Schedule A where your pay is going to go. Do not include yourself on tables 1 or 2. Okay, so the other question was on if there was an employee last year and is no longer with you. Yes, your loan amount obviously was based upon that person being there. Do you just have to repay that portion? The answer is no, not necessarily. The loan calculation as to what your amount was is completely independent, as we're seeing, of what you do in the 56 days that you have the loan and what you use it for and who you use it to pay. You can hire new people. If you don't hire new people, can you spread out that time among other employees that you still have? The answer is clearly yes.
With the caveat, well, I guess with the caveat on that, Aldo, that they may not meet the full-time equivalency.
That's entirely possible.
So you can spread out the hours, get them the hours, get over the 75% threshold, but if you have people that are close to the 40 hours, this is an easier thing to play around with when you have more part-time people than full-time people, because you just lock in with this clarity of the definition.
So I'll answer that more specifically too on this question. This particular customer had a number of employees that are no longer with the company. And so what we're seeing in this list are the people that are being paid in the 56 days. So do they have enough hours? And do they have enough of a pay? That's what, that's what this is starting to calculate. Do they have enough pay that the result is 0? So is their pay 91 or 75% or higher? And we have 2 that did not meet that, 1 that was not an employee before. So that's not something that gets in. So
Al, I'm going to throw something out too, just on that previous question real quick for the, so when you calculated for owners and just, so example, somebody like myself, when it's just one person in the operation and you were the owner, I expect some further clarification on the owner's compensation. The reason being, in the PPP, you have some people that will do one payroll at the end of the year to meet the IRS requirements and all of that type of thing, where they just do it. We're not normally advocates of that, because the IRS can have different interpretations on that. But if you were somebody that paid yourself your full salary in the December, and then your tax requirements, under the lesser of the 2 in the 8-week period as an owner compensation, you're going to have 0. Under their rule of the 15,385 or the 2019 comparison period, well, if you didn't pay yourself, you're going to have 0, at which point then how do you pay yourself? I would expect this has been addressed in, I have probably done about 12 hours of continue ed dealing with all of this stuff, and this has been addressed over and over and over again. And I know there has been some requests into the SBA and the Treasury Department to address this in some way, just in how that would work. The rule on the comparison period of the lesser of 15,385 or the comparison period amount, it can't be higher. There's going to be some exemption for that amount that will probably take you to the lesser of 385, or what that salary was that you took in December divided out by 52 times 8. So I don't know how many people are in that boat, but that was just something I wanted to put out, because people may start to do the calculation and go, I can't pay myself. And that is a known issue, just yet to be addressed. So
if you have more questions on that, or you're not sure, reach out and hopefully we can do a little bit for you on that. How does a 1099 sole proprietor handle payroll being 75%? Again, this is going to come down to using these, and it goes to what Jim was just speaking to. We have comparison periods that they're telling us are the rules. So I don't know.
Yeah, these rules are the equivalent of throwing spaghetti at a wall and seeing what sticks. And if it all falls off, they're going to throw some more spaghetti at the wall. And
I'm assuming that this question also is referring to a Schedule C filer.
Yeah, and that's an issue. So it is, if it is being based on what your overall net income is for the year, and that divided by 12 times 2.5, if they're basing it on the 1099, you theoretically run into some issues, and in order to meet that, the amount you'd be paying a lot of employment tax if it's based on the net income of it. And folks, to be real honest with you, I have not really looked at the sole proprietorship stuff because we just didn't have anybody that was doing that at the time. I'm more than happy to look into that as well and see how they handle it. But they are going to, my guess is you're going to have at least 75% of your loan be subject to self-employment tax on your Schedule C of the return for at least the employee side of, in that case, you are the employer and the employee, but I still think you're gonna have to meet that threshold.
And also to help clarify this a little bit too, Jim, right? The first payment on a loan isn't really gonna happen until 6 months after the 56 days, right?
Correct, yeah, so there is a 6-month
delay. So
deferment from
to figure this out,
whatever
in that situation.
And I'll be honest with you, I'll have to go back and take a look. I don't know if it's the end of the 8 weeks or if it's 6 months deferred from June 30th. We have a mutual client that when he got his paperwork, it was the deferment on the paperwork was 6 months from June 30th.
So that being said, right, in order to help somebody in the situation of being a sole proprietor, getting a 1099, there won't be any payment made.
The first payment's going to happen sometime at the end of April, beginning of June, or end of November, beginning of December.
So yeah, what you don't want to. I mean,
and you will have long had the reason for the deferment is you can't apply until June 30th for the forgiveness, and the bank has up to 60 days from the date of when you submit your forgiveness package to make a determination. So they didn't want people, and my guess is
in this particular, to answer this question, maybe it's a little bit more vague. However, the realization is you might be able to wait until, say, October, November, December before any payment is due. Or 60 days prior to that, because the bank has 60 days. If you got your ducks lined up and whatnot, you can put that package in knowing at least 3/4 of your year as to where you're going to sit for a 1099 and allocating it out. So don't think, that's another thing, don't think that you have to put this in July. You don't have to put this application in right after the 56 days. There is time. What I think our major stress point today is track what you're doing now, particularly for businesses that have employees that are not in this situation at 1099 sole prop. Track it, watch your cumulative numbers, know where you're at, because once it's passed, you're not going to be able to do anything else about it.
Yeah, the simple thing is hindsight could suck in this equation. You are much better to be proactive than reactive. So if you still got time, and that weeks, get with your people, get with your professionals, get with your payroll, and start doing your calculations, start making sure, because we have a broad spectrum of rules, and now those rules that is the framework that will be whittled down, but we know what a general outlook of this is gonna look like. And again, I do expect there to be some changes. So some of the stuff we have told you today may or may not be the case. Al and I have a history of doing these on a Friday, and then passing messages back and forth on a Saturday going, hey, did you see what changed since we did the Friday thing? So I expect we'll be back here with it, but this is a pretty good general framework of of the requirements and the requirement periods.
Is there anything else, Jim? I mean, here's the safe harbor. We've got that calculated in this particular situation. They're not safe harbored using the simplified method. They are safe harbored using the actual method. However, as we saw so this is a balancing act, folks. There is no necessarily hard and fast rule. And so I'd like to say that there is, and there isn't.
Yeah, I did, for people listening, to be honest, when the spreadsheets went together, our, our, our original thought plan and the creation of them was drop and pop, and here's our calculation. And as we're finding out,
Yeah, it's definitely not
this
going to
is
work
going to
out.
be an individual sheet to an individual to business based on their circumstances.
And these sheets will change, and is one of the reasons why we're not going to release these. Not because we're trying to keep things to ourselves. The reality is we're going to have to charge for the time that it takes to do this. So if you're looking for that assistance, just realize that we are going to have to charge, because this is very intricate and very involved.
And I will say that that is not just us. That is a peer group sort of decision. I have not talked to any other practitioners and the people that are just providing this because of this. They have, once again, the government does what the government does best, and took a complicated problem and made it the Titanic as far as sinking and sailing and that. So this is going to be, yeah, I will say, what's the saying? Penny wise, pound foolish. Don't get stuck with a big non-forgiveness amount because you wanted to skimp on paying somebody to
Yeah, at the
make
end
sure
of the day,
that
I don't particularly care if you use me, Jim, or an elephant. Just make sure that you're on top of this thing
Yes.
and is going. So with that said, I'll give a little insight. You can, if you're a true payroll customer, you can go to the report section. Part of what we're using is the total pay. That's a report in the under the reports tab, and all of these reports, I will tell you, they're the payroll details spread across a date range and summarized by employee. So you're more than welcome to attempt to figure all that out yourself. Not trying to hide where we're getting the information from, but that's what you're going to need to do. And you can see we've got this. We've got the summary here, which is the same as this is just your 56 days. You're doing that as you go. You're going to need the 630. This is just a templated information so that I can build up the rest of what we did. Here's your 215 to 426. That's yet another pay period that you need to be worried about. From January 1st to the 31st of March, you need to worry about the 215 payroll. You need both of the comparison periods to know which one's going to be the best fit for your FTE calculation. And then you need the details of your actual covered period. So, and then the rest of this.
I will say, I will tell people listening for this, so that, people understand. And Al and I are joint venture guys. His business is his business and my business is my business. So when we're pushing and promoting, there's nothing in here for either of us. I attended a webinar, as Al knows, with another company that does payroll, mainly for the reason to try to figure out, were we on the right track and were we overcomplicating this? And believe me, nobody wanted to be more right that we were overly complicating this than I did. And we had actually got to see the spreadsheets of the competitive company to Al, and it is essentially laid out in a different format. It essentially the same thing with the same number of tabs at the bottom, pulling questions and pulling equations. This is an extremely deceiving 11-page application. And
Yeah,
we are
hindsight
not
is going to kill you.
we are not, my end, and I think I can speak for Al, we are not pushing that and any of this to get you to ring our phone off the hook and try and bill for professional time. I still have a whole tax practice to run with an extended tax season that's going on. Al has his own things going on as well. So we are not pushing this to try and drum up billable time, billable hours. We are pushing it to let you guys know it is a complicated thing. Proactive, proactive, proactive. document, document, document. And whether it's using myself, using Al, using both of us, using your own people, in that seek out some professional guidance to make sure that you are on the right track, doing things the right way, and doing it. And as I say to and clients of mine, while I don't claim to be the end all be all.
What?
I mean, we're pretty awesome, but if you throw this to your professional, your practitioner, or your payroll people, whoever they may be, and they come back with no answers, that's something you're definitely going to want to think about. This is not going to be something where you get somebody and they tell you, oh, just send me the stuff, I'll figure it out. Because at the end of the day, if I figure your stuff out wrong, it's not me paying back the loan, it's you. It's not me, not getting the forgiveness, it's you. So proactive, document, start looking at your stuff, make sure that you are there. Obviously, if you're one or two people and nothing has changed, or 4 or 5 and your payrolls are the same, the equation becomes much simpler. But for businesses of fluctuating, restaurants, salons, anything where it's an up and down cyclical thing, proactive.
Unless there's any other questions that anybody would like to ask, either in the chat or the Q&A, I think we can.
And if you go to
wrap it up.
www.truepayroll.com or www.iaoaccounting.com, that has all of our contact information. Both of our websites have blogs where we have put some of this stuff on, and some of the publications, and that Al is got more than mine, just because he is better at putting it out there, where I, in the interest of full disclosure, will usually just copy and paste whatever he does. So yes, I let him do the work, and then I steal it and look like I know what I'm doing. But that's got our contact information. We are, we do this to, whether you're clients of ours or not, we're putting it out there to get as much information out there and to help people. And if we can help you in any ways, feel free to contact us. And we are more than happy to try and help in any way we can. And
well said.
That's all I got.
I don't think I need to add anything to that. I'll just end it. We are pretty awesome. It's true. I'm an honorary member of Team Awesome.
Guys, thanks for tuning in. Again, I think Al's recording this, so it is on YouTube. We did throw a bunch of information at you, so if you forgot stuff or that, reach out to us, and we'll try to clarify whatever we did. And obviously,
I will add this one thing. We're probably going to have a separate engagement for this. We cannot guarantee results, so we will have an engagement letter if you do want to. Well, at least I should say we're going to come up with a separate engagement letter.
Yeah. So.
We'll do our best.
And again, Mike, stay tuned to, if you look at Independent Accounting Office, True Payroll's Facebook page, social media, those type of things, or our web pages. As things change, we try to schedule these out about a week in advance, so it gives us enough time to let people know what we're doing so that they can tune in and schedule a time. Obviously, if we do it sooner than that, then it is because something has popped up that has given us pause or concern that we would rather get out there sooner than later. So, but we will be doing as many of these as we can, and updating you guys as the information changes.
Have a good rest of your 56 days.
Enjoy. Have a good holiday weekend, and we'll see you guys soon.
I'm cracking a beer. All right. Bye.